Welcome to Byte-Sized Tech. This week, we're digging into the absolutely massive trillion-dollar bets that are shaping the future of technology. You know, from the mind-boggling cost of AI to putting unprecedented faith in a single leader, we're going to follow the money and see where the biggest gambles are really being placed. So, the biggest bet in tech right now, no surprise, it's on the future of artificial intelligence. But you know, underneath all that hype, there's this incredible anxiety running through the market, and it all boils down to one simple thing: the absolutely staggering cost of building this future.
And the anxiety that just sent ripples through the markets this week, it was all kicked off by a single, kind of off-the-cuff remark from a top OpenAI executive. It really raised this terrifying question: is this whole AI boom getting way too expensive to even sustain itself?
So the comment that caused all this drama was actually pretty simple. OpenAI CFO Sarah Friar just kind of hinted at a potential government backstop for their chip investments. But the market? Oh, the market heard something completely different. It heard a signal that OpenAI might need a federal safety net for its huge infrastructure costs. And that one little comment just ignited fears that the entire AI build-out was this giant bubble about to need a government bailout.
While the response was immediate and it was forceful, CEO Sam Altman jumped in to clarify, saying, and I quote, "We do not have or want government guarantees." He made it crystal clear they are not looking for a federal safety net. It just goes to show you the tightrope these companies are walking, trying to project immense ambition without totally spooking investors about the astronomical price tag. So how can they possibly afford it, right? Well, Altman insists OpenAI can fund its own ambitious goals. He pointed to the company's revenue, which is growing way faster than anyone expected and is on pace for a staggering $20 billion annualized run rate. The message is loud and clear: we don't need help, our own growth is going to pay for it. Now, while Wall Street is debating the cost of AI infrastructure, Tesla's shareholders just placed an equally massive, totally unprecedented bet. But this wasn't a bet on technology. Nope, this was a bet on one man, Elon Musk. His hugely controversial compensation package got approved, and it wasn't even close. An absolutely staggering 75% of shareholder votes came in supporting the deal, giving him a clear victory and just a massive, massive mandate. And the scale of this bet, it's almost hard to wrap your head around. The package, which is tied to some really aggressive milestones over the next 10 years, could potentially be worth up to $1 trillion. But really, more importantly, it paves the way for Musk to increase his stake in Tesla all the way up to 25%.
So as you can imagine, this vote has completely split the investment world. On one side, supporters argue that a 25% stake is a necessary shield, something to protect Tesla's mission from short-sighted activists. But critics, like the giant pension fund CalPERS, they fear it grants one person way too much control. They see it as this immense key man risk, the danger of tying a company's entire fate to just a single person.
These huge bets aren't just on infrastructure and leaders, though. The same high-stakes logic is being applied to individual products. And right now, there is no bigger product bet in the world than the most anticipated video game in history. To really understand the stakes here, just think about this. The last game, Grand Theft Auto V, sold over 220 million units. That makes it the second best-selling game of all time, right behind Minecraft. The pressure to get the sequel right is it's almost impossibly high. And all that pressure is leading to a really calculated gamble. The publisher, Take-Two, has delayed Grand Theft Auto V6 all the way to late 2026. Their goal is nothing less than perfection, a 95+ score on Metacritic, which is the industry's big report card. It's a bet that a completely flawless launch is absolutely worth the wait. Okay, so with all these massive corporate bets being placed on AI, on leaders, on products, it all comes down to one critical question: is the consumer actually ready and willing to pay for all this stuff? And the answer we're seeing in the data is a surprising and pretty resounding yes. I love this quote from Max Levchin, the CEO of Affirm. It really says it all. Despite all these rumors of a slowdown, his data shows the American consumer is healthy. They're not just actively shopping, but just as importantly, they're paying their bills. And this isn't just some isolated data point. The creator commerce platform LTK is backing this up, reporting that the average order value on their platform is up 7% year over year. So people aren't just browsing, they're actually spending more when they do buy. This underlying consumer strength is the foundation that all of these trillion-dollar corporate bets are built on.
But here's where it gets a little tricky for the big players.
It's not just that consumers are spending, it's that how they decide what to buy is going through a fundamental shift, and that poses a brand new challenge for every single one of those trillion-dollar gambles. What we're seeing is a fundamental rotation of trust away from traditional advertising and directly toward creators. In a crowded, noisy market, people are looking for authentic recommendations. In fact, data from LTK shows consumer trust in creators is up over 20% in just 1 year. This totally explains why huge brands like Nike and Target are flooding onto creator-driven platforms. They have to follow the trust.
And this new trust model is driving probably the biggest shift in how we shop. Last year, it was all about finding the best price. This year, priorities have completely flipped. Consumers, kind of shaped by years of supply chain problems, now almost expect popular items to be out of stock, so they rely on creators not just for recommendations, but to help them find available alternatives. The new premium isn't price, it's just plain availability.
So this really sets up the central conflict, right? As tech giants place these huge, top-down, trillion-dollar bets on AI, on visionary leaders, and on flawless future products, consumers are making their own bets from the bottom up, on individual creators and the simple reality of what's available right now. The ultimate question really is, which of these opposing bets will actually pay off? If you enjoyed this episode, please like, comment, share, and subscribe.